Hey traders, hopefully you're having a great day. We're going to be going over the crypto market today, going over Bitcoin and some altcoins as well. Obviously, very important catalyst here that we are coming to in about 14 hours and 30 minutes is the Bitcoin block reward halving. So it'll be interesting. I'll be sleeping very shortly and then I'll be up before then, so I'll be seeing what the price action is when the actual halving is occurring. But like I said before, I already have my bias of what could potentially go down. Obviously, price action is king, but our bias is that we will be a little bit more short bias, and we are expecting another sell-off before we get our major bull run that is going to be something similar, if not greater, than what we saw in 2017. All right, so let's look at some on-chain analysis here. This is the total hash rate, and we can see we're basically almost at the peak. If we go all the way back, we see that we're basically peaking for the hash rate, which means that it's a very difficult time for miners to actually mine BTC right now. Basically, hash rate represents the difficulty of a miner to actually mine Bitcoin, and yes, on average, globally, miners are able to sell Bitcoin for higher than what it costs them to actually mine, so they are profitable on average. But if you have a potential miner capitulation where you have a high amount of hash rate as well as a lot of miners trying to compete for that reward, it does create a squeeze like we've talked about. The Bitcoin price has been nothing but going up since really the drop over 50% in a single day, and we've been really patient. I haven't been super active because I've just been waiting for after the halving. I knew that there was going to be some level of hype. It was way more than I anticipated, but hey, that is life. You'll live and you learn. But post-halving is when I feel like I have more of an edge and more of an understanding of what could potentially play out. It's not going to be instant, but let's see how the price action will play. The difficulty adjustment is actually going to be in 7 days. So yes, the block reward is set to be adjusted in around 14 hours. But the actual difficulty for the miners is not going to be until 7 days and 5 hours. It's just something to note. Fear and greed index is at a 40. We were in extreme fear last month, as we saw after the 50% drop around early March, mid-March, somewhere around there. And since then, we've been climbing up, and we've hit almost the highs of what we saw in February of 2020, when we had that nice reverse head and shoulders push to the upside. And now we are seeing the price hit similar zones and kind of table off here. Obviously, we're not really going to use any TA or anything on this chart, but it does show you that we are below the very fearful stage right around here, and we're now kind of in the middle of the 40s and 50 range, as we can see. So got more room to move to the upside and downside. We're not really in a particular place where we're over exaggerated on one side or another, in my personal belief. Something to note that recently came out. Don't know if you know who he is, but he is Paul Tudor Jones, very famous investor, trader in the financial markets. He is a hedge fund manager and investor. Paul Tudor Jones discusses his opinion in regard to the crypto asset Bitcoin on Thursday, saying that it reminds him of the past gold played back in the 70s, or the gold. Reminds him of the part gold played back in the 70s. Jones also disclosed that his fund, Tudor BVI, has a percentage of Bitcoin futures products as well, and he believes the cryptocurrency is a hedge against inflation. So, like we've talked about before, inflation is inevitable with the amount of money that they are printing. It does take time. I do think that there's going to be some deflation before the inflation will occur, but with how much money they're printing, it's almost inevitable. It's just a matter of, will the inflation be basically to financial markets like real estate and equities, like we saw in 2009, 10, and the first 3 rounds of QE. It was basically targeted strictly at commercial banks, basically. So then those commercial banks purchased financial assets, so real estate, REITs, and equities. So now we're providing funds to everyday individuals on Main Street, so then there's a larger pool of currency fighting for the same goods and services. So I think we will see that CPI number go up, which will then create a little bit more worry for inflation for the entire population. And it's not good inflation when you have goods and services go up compared to financial assets and real estate and all that stuff, obviously. It's very detrimental if you have rising inflation on your everyday goods and services for the population. Let's now look at gold and what happened back in the 70s. We will get into another video discussing the entire 70s because there was quite a bit of inflation and they had to actually detach off any sort of gold standard off the Bretton Woods system, which we'll get into in that video. It's a whole video within itself, but let's quickly look at the actual numbers in terms of the price appreciation that gold had in the 70s. So this was the Great Depression in 1929, right around here. Gold jumped from $300 to over $680 during the early 30s there. And then from the low of the 1970s, in August around 1970, 241, it absolutely took a rocket almost to $1,910. And then this is where Paul Tudor Jones is talking about in 1976. Gold was around, let's say, $500 in 1976, and then it jumped all the way to around $2,000 in 1980. So he is looking at this time frame looking similar to what we saw in around 76, he said. Reminds me of gold back in 76. So he is extremely bullish on cryptocurrencies and Bitcoin specifically. Not all cryptocurrencies, specifically Bitcoin. So if I said, this is what he said, if I am forced to forecast, my bet will be Bitcoin. The best profit maximizing strategy is to own the fastest horse, explained by Jones, the founder of Chief Executive Officer Tudor Investment Corp. And his fund added this quote. Jones recognizes that around 6.6% of the global GDP has been created out of thin air since the beginning of February. It happened globally with such speed that even a market veteran like myself was speechless. This has never been done in history. So, yeah, this totally makes sense that it's unbelievably precedented. It's something that will have major reactions down the line, and for people who think that the US dollar is a safe haven and it will be a safe haven for decades to come, you might want to look at some monetary history, look at every single fiat currency that's ever been in existence, which the US dollar is a part of that pool of fiat currencies. All right, we are witnessing the great monetary inflation, an unprecedented expansion of every form of money, unlike anything the developed world has ever seen. This is the type of impact that the central banks are creating for all investors around the world is people will have to flock to a safe haven, because when they devalue and debase a currency so much like they will and continue to do so for the US dollar and every other currency in the world, definitely makes sense to look for safe haven assets. And the fact that some of the most brightest, smartest veterans in the financial space, like this man, has spoken very, very positively and bullish for BTC in the cryptocurrency sector. So it's great to see that it's not just a few select people who have that bias, but it's also very, very well-versed experienced traders and investors like Paul Tudor Jones. So let's get into the charts here. We're first going to look at Bitcoin, and then we're going to go into the rest of the charts. So let's first go on to the weekly to get a good understanding of where we currently are and where we could be headed here. So like I said, this was a massive push to the upside. I was looking for some level of a base. We didn't get any base like we saw in this base, where we held a series of higher lows and a nice key level of horizontal resistance. This was a nice ascending triangle. It was a squeeze. We are looking for these squeezes. We didn't get any squeeze here. There was actually an ascending wedge that formed that didn't really break to the downside, and I didn't really have that much confidence in taking too many longs here. But in my personal opinion, that's completely all right. If it doesn't seem right to you, you shouldn't take it. And if it does come back down here, hey, you're looking at the exact same price as you saw in, let's say, early April. So, you know, if you're a trader, it can be difficult to sit and patiently wait if you have a bias, if it hasn't come to fruition yet. And it's your job as a trader to completely shut out all noise and have your own bias and be in your own bubble where no one is able to kind of change your bias in these times where you're patient, you are having to have the ability to sit on your hands and not get FOMO. Because I know for a fact a ton of people were longing at like 95, 96, 97. Like, oh, we just tapped 10K, monumental bull run coming up. And yeah, I was very patient. I was not looking for longs or anything. I was patient and waiting for that first massive sell candle to come in to indicate the momentum, and that's exactly what we saw, and we'll look at that in the smaller time frames. But just talking about the larger macro view, you know, yes, 100%, it could just continue going up, but at the end of the day, just in terms of being a trader, you have to have the ability to shut out all noise and heavily control the inputs that are going into your brain. And that kind of sounds extreme, but in my personal belief, that is the best way to control your psychology, is by controlling every input you have in your brain. It's not easy, you have to limit things, but at the end of the day, if you want to successfully navigate through the financial markets, you have to have conviction, bias, a clear mind, proper psychology, especially proper psychology. And I think the way to do that is, to some degree, kind of cut contact to some sense with, you know, not everyone, but to be able to have conviction, have bias, sit still when things are, you know, going off course, I guess you could say. Because when they're on course, it's phenomenal, but when they're on the course, you got to be able to not have FOMO, because there were some good setups that were above here, but our bias, our thesis was that we don't want too long, it's still too early, and we want to be looking until post BTC halving for those nice lower level entries. All right, so basically we hit the resistance and we had a massive weekly candle close with a big rejection at our key level of resistance. Basically, we see more transactional volume take place in that candle than we did in the entire move to the upside, other than the massive weekly candle after the rejection. That, in my opinion, tells you something. It tells you the strength of the move to the upside. It wasn't, maybe it's just me, but it didn't seem that strong until we broke around 74. Then obviously we had that massive move to the upside, but before that we looked like we were weakening in the bulls. Just my personal opinion. Alright, so let's now look at a smaller time frame. This is now going to be the daily time frame. We can see we did touch our key level of resistance. We got the halving here in around 14 hours, so pretty soon. I'm going to just take off this because we don't really need any time soon. And let's get our snip and just talk about what we could potentially see right here. So let's get our snip. And let's draw a little square, so then we have a good understanding of what our viewpoint is and what we could potentially see here for an opportunity. So first things first, we got to have a bias, and our bias is post-halving, the BTC miners will receive half the revenues they used to, right? And the mining difficulty, the hash rate, is not decreasing. It's actually increasing still, which means that there's a large majority of miners that are, you know, on the level, the tier levels of, you know, just barely getting by. They're able to make a profit, but not too much. They don't have the best efficiencies. They don't have the lowest cost of electricity. They don't have the best mining equipment, right? So there's going to be less efficient miners in the network. Like anything, there's going to be miners who are very dedicated, who spent millions and millions of dollars in the development of their mining business, but there are people who are not taking it as seriously, and these are the inefficient miners. I personally think that the inefficient miners will have to get called after the halving, which will allow the BTC reward to get funneled in the most efficient miners, which will result in a very reduced amount of supply entering the market that will actually get dumped into the market, whereas inefficient miners have to dump more Bitcoin into the market, sell more Bitcoin in order to continue operation, whereas a very efficient miner is able to keep more Bitcoin in their treasuries and store it and dump less Bitcoin in the market because it costs less for them to operate their business mining Bitcoin. So I personally think that there is going to be a culling of inefficient miners in the network after the BTC halving. It's not going to happen the minute after the halving. We don't exactly know when it's going to happen, but there is a very the level of speed at which the market falls when there is a squeeze in the miners gets increased significantly is the thesis of our trade. And it's not like we're aiming for $1,000 or anything. We're aiming for 25, 20, 30% move, somewhere around there. So if we're looking for a nice continuation pattern, maybe in the 9K, 87, we'll look in the smaller time frames. And then if we're looking for a drop to our ascending level of support connecting the higher lows, that's a 25 to 35-ish% move depending on how far the wick goes to the downside and where our entry is. But the reward is looking, in my personal belief, a 25 to 35-ish% move to the downside is the outcome of the potential trade that we're going to have here, in my personal view. And that said, it seems definitely doable since the price would still be in the squeeze of this symmetrical triangle, this large symmetrical triangle we have here within the weekly chart. So in terms of the large time frames, it still would be within the macro bullish price action pattern that we have here on Bitcoin. But in terms of the smaller time frame, we could still see a move to the downside to cull the inefficient miners. And I think that a lot of people who are new to the market, who don't really understand investing, have never invested before, they might get shaken out here, which, you know, that's usually what happens in the markets. There's a shakeout to kind of shake out the weak hands before it goes and makes a huge bull run. Nothing is going to go from point A to point B in a complete straight line. It has to have some pullbacks, and I do think that this was a little bit artificial, a little bit weak. After it broke 77, 78, it was an absolute rocket that moved to the upside. I think a lot of shorts just got taken out there. Don't exactly know, but at the end of the day, the thesis for me is that we will get a little spill here. I'm thinking around 6K. The wick might go further down, but in terms of the actual price of the candle closing, I think that we'll be able to stay above around 59 6K zone would be a pretty good close of the daily. And then if we see a little bit of a roar, see some consolidation, that in my opinion would be a little bit more of a foundation to build a base off of. This is not a foundation in my personal view. In my personal view, this is a foundation, right? This is a low. This is a consolidation zone. This is a volume accumulation base that could create a nice, huge move to the upside. In my opinion, we just haven't created it. This was also a base as well. A reverse head and shoulders is a very solid base for a potential reversal to the upside. We didn't really see that, and that's why my bias was a little bit more to the downside, but there's also fundamental factors playing it in as well. Not just the technicals, but also the fundamentals. All right. Now, for the daily, we understand my bias. We understand why I am looking for shorts kind of post-halving here. And I'm not really looking for longs just yet. I want to see that next dump before I look for longs in the market. First things first, we see that there is this nice ascending zone. We see it initially test as a resistance, a little bit of a support there. And then we see one touch, 2 touch, 3 touch, 4 touch, pretty well respected all around. That's going to be our key level of ascending support. So if the price does break that zone, definitely we'll have a bias that we're going to move to the downside. We also did draw in a couple other ascending zones. We saw this ascending zone. We see another one right here, and then we see a third one that's kind of like this that the price is currently holding right now. We'll get into the other trend lines in a little bit. But basically, we have a bunch of trend lines from this zone kind of putting support zones around this area. So right around here, we know that there's a decent amount of buy pressure, and that's going to be holding up the price to some degree. But in my personal view, what are we looking for a potential opportunity, because we know that there is sell pressure within this zone as well. So we're getting a nice squeeze where we get a series of higher lows pushing the price up, and we know that there's sell pressure within the 10K zone because of the major descending zone on the weekly chart, on the daily chart, on the large macro time frame of the symmetrical triangle. So in that said, we understand it, and we know that there's sell pressure there, as well as the fundamentals of the lack of decrease in the difficulty of mining Bitcoin, which is going to basically create pressure for the miners, because as the difficulty increases, as the hash rate increases, it's going to cost more and more and more and more to mine Bitcoin. If Bitcoin is continuing to go up, that's great. Everyone wins. But if it's going sideways, then you're going to have problems, because the cost is going to continue, but the profit you're making, the revenue, is going to remain stationary. And it's going to be a crazy squeeze if we see the price of Bitcoin go down while the difficulty still continues to go up, because then for any inefficient miners, you're getting squeezed to a point where you can't make any money. And this is what a miner capitulation cycle will look like. It is culling the inefficient miners. It is flowing capital from the inefficient miners to the efficient miners, like a free market should be. There's no bailouts for any inefficient miners, because it's a American favorite, like an airline or anything. It is pure capitalism, and in my opinion, that's great. All right, so let's quickly get a little bit more discussion on the daily chart before we dive into the smaller time frames. The potential here that we have for a reversal is actually going to be head and shoulders. We see the left shoulder right here. We see the head right here. And if we're able to get a nice little push back up to around 91, 92, 91.50, 92, I think that would be a really, really good opportunity. As long as we see the price hold, we see that was a major rejection zone before our huge capitulation back in early March, late February. We also rejected off that zone and tested as a nice support previously in our bull run at the start of 2020. Not really bull run, but our bullish momentum at the start of 2020. Right here, previous resistance, new level of support, new level of support as well. Or sorry, that was the wrong line. We see that right here, resistance turning into support right here, and then it turns into resistance as well, and then we held that zone and then tested as a resistance before our major fall to the downside. We got that nice short there on that retest, so it could look something similar to what we saw right here, where we got a price action pattern that was a little bit of a squeeze like this. It made a move to the downside. It broke our key level of support, and it tested as a new level of resistance. We're going to potentially see that right now. If we do see the price hold that zone, in my opinion, we've seen it in the past get rejected and have quite a bit of sell pressure to push the price down, so I wouldn't be surprised if we saw that yet again. And back in our huge triangle of 2019, we saw the reaction right here, and then we saw the base of the triangle at that zone. So it's a pretty vital zone that we've seen in the past. Obviously, it could go up a little bit higher, but in terms of the validity of that zone, as well as the potential of if it does hold this zone and start coming down, the validity of the head and shoulders, as well as that would be in line with our ascending zone that we see right here, as well as the market structure, because we see that the price was able to hold this zone. So we know that there's a major level at around 90. Let's see what that zone is exactly, at around 8,500. So we know that there's a major level of demand at 8,500 that if it breaks is going to be, in my opinion, a cliff that it is going to fall off. So that's going to be the main zone for the breakout, and we are currently looking for a nice little pullback for a potential head and shoulders with the head right here, with the left shoulder and the right shoulder. That would be a really good opportunity for a reversal for this bull run, or this bullish momentum that we've had here. So we'll see where it goes. That's my view. That's my take on the price action. A invalid situation that would basically take away that opportunity is if we get the price to break and hold above this zone like we see right here. If we see the price hold above this area of around 92, 91.70, that in my opinion would be an invalidation of this price action pattern. So we have to make sure that if we are looking at this, we do want to see the price hold this zone, maybe consolidate it a little bit, quite a bit of a drop, and we'll be looking for that nice consolidation and looking for sell pressure within that zone. So that's going to be one option that we have here for the price action. Another one is going to be a potential double top. We might see something like that if we do get a break of this zone, and if we breach this zone, we might test that double top. I still would be looking for opportunities to short if we do get a double top, but if we do actually break this zone and start to try to go for the double top, I wouldn't be looking to enter at all unless we are able to break this key zone at around 8,500. That would be the confirmation of the double top break where the neckline has been able to hold, as well as that would be the confluence where you have the ascending zone in line with the horizontal zone, and the market structure would have to basically provide me a lower low, and I want to enter on the lower high, something like this. You might get a wedge or some ascending triangle or something along the lines of that, and that would be the nice structure that I'd want to be looking for a potential next opportunity to move to the downside. So that's going to be some opportunities that we'll see here. I don't exactly want to be looking to short right now. I just think it's still too early, but on the daily, that's currently what I see within the markets. A major zone that we see that's kind of splitting the symmetrical triangle is going to be around the $7,700 zone. This is a key zone within the chart. I think if it goes below that, it's probably going to be hitting that 6K zone or a little bit under, but if it stays above 77, we could see the price just consolidate on the top half of the symmetrical triangle. Like if we only see a dump to here, and then we get a big wick, but then we get the body to close right here, and then we get some consolidation, that could just be the consolidation zone, and that's going to be basically where we could see a huge breakout appear after this zone is held. But we'll see how the price action reacts to that zone. But in my personal belief, I think sell pressure is coming within the next few moments here, in the next couple, I guess, days, weeks. And then it's just a matter of, are we going to break this midpoint within the triangle? If we are, we're probably going to see that lower half. If we are able to hold it, we'll get some consolidation, I'm sure. Hopefully, that will then give me a base to work with, unlike what we saw within this little bullish push here. I'm looking for more of a consolidation, more of a formation of a base, basically. It's not really giving it to me. We'll see where that goes. That's going to be my large macro view of the chart. Let's now go into the 4 hour here. Basically, that's my view of the larger time frames. And let's just take a look at a 4 hour. Not really going to dive into anything smaller than this. But this is that chart I talked about briefly, where we have different ascending zones. We have one ascending zone like this, where it was a previous level of support, new level of resistance. That could get breached. I'm not too worried about that. I'm still looking for that head and shoulders. We have another one right here, like so, which was creating that wick low for that breakdown, which held, which I'm kind of happy about, because if it does come back here and go like that, that would be a really, really good opportunity in my personal belief. But we'll see where it goes. I'm still looking for that move to the upside here. Don't really see it. That would be nice. And then we got a lot of support with a lot of these supports here from, that was a really poorly drawn line. We got a lot of supports from resistance, support, as well as support, and then we got touches right here. So quite a bit of trend lines to the upside. We got 2 on the bottom, 2 on the top, so not a lot. I try to keep it simple, but this is about as complex as trend lines really get for me. I don't really want to go too hard on them, but that's currently what I see in the market. is I'd like to see that come up a little bit higher to around 91.50, 91.70, maybe even 92. That would be good. And then I'd like to see some wicks to validate that there is sell pressure rejecting the price moving higher up. Not really going to touch on the 1 hour or anything smaller. We see a little bit of a squeeze, not too valid. Basically, I'm just looking for that move to the upside. I don't really see anything right now that I want to trade or anything. I'm going to be pretty patient because we got a pretty important catalyst coming up for this market. So that was Bitcoin. I'll actually do an inverted chart. So now we'll look at the inverted chart of Bitcoin, which is going to be down is up is down. The higher we go up, the lower the price is, and the lower down we go, the higher the price is. Basically, it's an inverted chart of Bitcoin. So I'm going to get a little bit of water, and then we'll continue on this analysis. All right, so this is the 4 hour. We already know how the large time frame looks, very similar to obviously the Bitcoin chart, except it's inverted, if I have not said that 6 or 7 times. Okay, so let's go on the 4 hour, because I really like the 4 hour, and discuss what we currently see, what we currently could potentially see here for a move, potentially to the upside. So we definitely still haven't made any major break of a key significant zone yet. This would be the major zone that we want to see break. So right now, this is the reverse head and shoulders that we could be seeing. Something like that. I don't exactly know, but in terms of the reverse head and shoulders, it still could be valid. I'd like to see the price in this fall to maybe around, like I said, 92, 93, somewhere around there. That would be good. 92, 93 would be phenomenal. We'll see where that goes, but that would be the completion of the right shoulder, and this is the head, and this is the left shoulder for that reverse head and shoulders. There we go. And then that would be enough for me to look for a long, and then a break of this 85 zone would, for me, be enough to potentially call it a reversal and a move back to the upside. So, and that said, that's going to be the main zone that we're looking for. We got a resistance 2, 3, and we got a zone there, and we also have this zone 1, 2, 3, 4. Also this zone. So that's going to be some level of sell pressure within this zone. Once we pass that zone, that's really going to be rocking up in my personal belief. So then that means that around, let's say, 77, like I said, to around 6K is a pretty quick move to the upside in my personal belief. If we get a break below 77, and like I said, on the large time frames, that's going to be kind of the midpoint for the symmetrical triangle. So if we do break below that zone, I wouldn't be surprised if we do get a dump all the way to around 6K. So looking at the inverted and the normal chart, it definitely makes sense to me in terms of where we could possibly go. Still think it's a little bit too early. We still made a lower low. This has still not broken the highs here, so we haven't made any higher high structure. If if we look at the wicks, it's a little bit different, but I'm looking at the 4 hour chart. If this was a little bit higher, and if we're able to create a structure where this was above it, that would be different. But in my personal view, we're still holding below these highs, similar to what we talked about within the price action of BTC. We still are holding above the lows there, which is a possible head and shoulders, and in this chart it would be a reverse head and shoulders. So yeah, I'm pretty happy with my thesis, my analysis. What we're looking for is something along the lines of a series of higher highs and higher lows like this, and then we'd be looking for some level of a squeeze would be really good, where we see maybe a wedge or a triangle or something along the lines of that. But this reverse head and shoulders would be a good opportunity for us to capture a pretty good entry short before we potentially add on for the final capitulation. And I wouldn't really be expecting a sell-off that would exceed this major zone around 58 to 6K. In my personal belief, doesn't mean that it won't happen, but my bias and take profits and where the price could potentially kind of low would be around that zone. So that's going to be my bias that I currently have within the market. So that's going to be all things Bitcoin. We're now going to go into the altcoins here. First looking at Ethereum, and then we'll go into the different altcoins that we have. Bitcoin, or sorry, we have Binance Coin, we have Link, we have XRP, and like we said, we're going to start off with Ethereum. All right, let's just keep that. I don't really like that 15-minute chart. I'm going to keep that 4-hour there. All right, let's look at Ethereum. Not really going to look at the large time frames here. So basically, let's just stick to the 4-hour because we don't want to go on to crazy time frames. But we got this nice little wedge that broke to the upside a little bit. I didn't trade this at all because I was worried about a bearish move to the downside, which did inevitably occur. So now I'm looking at the market thinking, okay, that was, I can't say expected, but I wasn't too surprised, to be completely honest. And now we're just looking for potential short exposure. But in my personal belief, I just don't really have a price action pattern to trade at this very moment. I think something, if we're able to get, let's get our snip and take a picture. We know that this around 200 zone would be a really good area for us to potentially use as a resistance because it was our support with our wedge right here. Support once, twice, and then we got a little move to the upside. If we had more momentum, I think it could have gone higher up, but I think it was just running out of steam because of the catalyst of the BTC having, in my personal belief. So basically, we got a massive move to the downside. I just don't think it's ready to short yet. I'd like to see something, if we're able to get something like this, where we get a wedge, if we're able to get maybe an ascending zone like this, and then even if we kind of create a move to the upside and then we consolidate here, that would be a really good opportunity because if it dumps down and breaking both the horizontal zone and the ascending zone of confluence, that would be a really good short opportunity. So I think it's still too early. I think we could get some consolidation here a little bit more. It would be great if we held an ascending zone. Like, I really like descending patterns when we're in a bullish push, and I like to see ascending zones in a bearish push because it's going to create some level of a squeeze that will create a consolidation and a tightening of volume and tightening of volatility, which will then inevitably create an overextension, I guess, or an expansion in volatility, and that's what we're looking for. So I don't really see anything just yet, so I don't really want to be entering, but in my personal belief, the $200 zone would be a really good area for us to possibly short if we do get a little move to the upside. Going to be a little bit careful with Ethereum because I think BTC looks better for an opportunity, but that's going to be my potential here. Let's just see if I can draw any trend line here of ascending significance. Yeah, to some degree, but you know, I've been drawing ascending trend lines left, right, and center, and crypto markets have basically been doing nothing but going straight up, it seems like. So I'm going to remain patient, but I do think at the end of the day we are going to get another low here. All right, so that's Ethereum. XRP, let's go on to a little bit larger time frames. Let's actually go on the 12-hour. And just talk about what we can see. Let's just go like this. And let's even go to the daily here. So XRP, in my opinion, is going to make a potential lower low, or at least hold this low, because we are connecting a low, lower low, lower low, lower low, lower low, lower low. So we're connecting this with a trend line right here. Maybe that could be a little bit lower, but you get what I mean. So if the trend continues, we could just see another lower low here. That would be a significant lower low. And if we just connect the zones, you know, it could be potentially around 0.1 really, which would be very, very low. But looking at the trend, we're making significant lower lows and lower highs. Yes, we did breach that high, but that was instantly rejected back down. If we look on the weekly, the 30-cent range is an extremely important zone. Around 30 cents, right around here, if we're looking at the large time frames, has been a demand zone, a support for a very long time. And once that broke to the downside, that was our key level of resistance. And now it looks like our new resistance level could be around this zone here at around 20 cents. So we can see around 20 cents could be the next main level of resistance for us if it does break down further. So in personal belief, let's just look right here and look on the smaller time frames now that we understand where we could potentially fall. I know it looks a little bit messy, but bear with me. Hopefully you can understand the price action. So we initially got this wedge, ascending wedge, to break to the downside, retest. We got a lower low, we got a lower high, we got a lower low. Is looking great. That's when we were short biased Bitcoin. That's when we actually shorted XRP. Fortunately, did not make money on that. We got rejected, and then we started trending up, and I just basically got out of the trade right there and then. And then we made a massive move to the upside after we broke this little squeeze right here where we got this zone, and then we see anchor point 1, 2, 3, and then we see this zone. So you got to squeeze, and then once it started kind of poking its head above this resistance, it had an absolute monster rally here that really pushed up quite significantly. And then we got a little squeeze here where we saw a series of lower highs and higher lows. We got right there. That was a little bit of a squeeze, and it just popped down below there, and that's where we currently are. So I extended this trend line out further, and it looks like we are holding this zone right now. And if we just continue this zone, now we got a potential zone where we see some lower highs and some higher lows, kind of potentially continue the price this way if it does consolidate. But we will see how it goes. I do think that this 18-cent range right around here is a major support zone that if it does fall below, it's going to have a cliff of a fall, in my personal belief, if it does get down through that zone. So that's going to be a major zone for XRP that I'm looking for. We've recently made the move to the downside, so I am going to be looking for some level of a price action pattern. I'm not looking to FOMO in. I'm not looking to randomly enter. I'm looking for a nice, clean price action pattern that I have edge trading within this zone, so I can basically set the best possible trade I can that has the highest dependability, that if I do it 100 times, I know I'm going to make money. That is the name of the game. You don't really have an edge with a single trade. I can't say I'm guaranteed to make money on this single trade, but I can basically be sure to say if I trade this pattern 100 times, I will make money. And those are the types of patterns you want to be looking for to capture in your tool bag. So yeah, see that squeeze? That's going to be what I'm looking for. I think it's still too early. Quickly looking at the 1 hour, massive move to the downside, but buyers are still in the market, as we can see, where we get buyers to basically keep the price at this zone. We do see a very significant zone around 20 cents, like we said, was a significant zone prior. So if we don't get any move back up, we might have to be looking for some short exposure if we don't get any breach of a level of resistance. We see that on Bitcoin, the level of resistance around is 8,800, 8,850. You can say is a level of resistance for Bitcoin. On Ethereum, we saw that the level of resistance was around 190. What we're looking for is a little move up. For Bitcoin, it's 9K-ish. It's 93, 92, sorry. For Bitcoin, for Ethereum, we're looking at around 198. It's currently at 191. For XRP, where it's currently holding the resistance of 20 cents, we're looking for around 21 cents. So a lot of these alts are not too far from a key level of resistance that would be great for a possible entry short. But because of the move to the downside, because of the momentum already that's falling basically all prices in the crypto market, we might not actually get that pullback. So, looking for some feeler trades that are 10, 20, 30% of the actual position that you'd want to be putting in might not be a bad idea if you are looking to put your risk on top of here, because then you're speculating that it will go down and it will actually act like you're looking for, and that would be a pretty significant risk reward, even if you're not putting a lot of money in. You're looking at 3, 4, maybe even 5 risk rewards if you are playing it right. So this is going to be the next chart, BNB. All right, so let's just go like this. And let's look what we are looking for. All right, so first things first, this is the major resistance zone, and this is the major support zone that we currently see within the price action. We saw consolidation to the downside, so we are, in my opinion, now in a downtrend. We saw a major uptrend. This was the consolidation phase right here. We entered into the consolidation phase. We tried to break out with this nice little wedge here. If you can draw and see that after, that was a very, very nice wedge with a series of lower highs and lower lows, getting squeezed, creating volatility, or squeezing volatility into a funnel, and then you get a push to the upside. You get a pullback, validating previous resistance and new support. I did not enter this, but it looked like a pretty favorable pattern if it was more bullish in terms of the larger macro chart, but it just did not look super bullish in my personal belief. Yes, we did get some nice squeezes, but at the end of the day, I just did not see that bullish confirmation yet, in my personal belief, and that's why I haven't been super bullish yet. And hey, you could have been making shit tons of money on the way up here. Good for you. I congratulate you. I clap hands, and I respect that. But everyone has their own way of trading. Everyone has their own bias that they project onto the markets, because if you're not creating narrative, you are basically gambling. You are flipping like back and forth, in and out. In my opinion, you got to have narrative. You got to have a story as to why you want to either go long or short. So going back to Binance Coin on the 6-hour chart, we broke our major ascending zone. We made a significant move to the downside. We are now in a downtrend. We are looking for continuation patterns to continue us to the downside. We just made a tiny little consolidation of a high and low. Definitely still too early to say that we are going to get a massive dump to the downside, but in my personal view, we are in a downtrend. Ideally, like I said before, I'd like to see an ascending zone or an ascending resistance and support, but ideally an ascending support that's going to create a series of higher lows that I could touch with a trend line, and when it does break, I have a pretty high level of confidence that we will get a move to the downside. So in my personal belief, it's still too early, but we are looking for short opportunities. If we zoom in here, like every other alt, we have a resistance at 1550, support at around 1470, just going in a sideways consolidation. I'd ideally like to see the price move up a little bit more, and then we create a series of higher lows. That would be phenomenal. I'd love to see that. But in my personal belief right now, I just don't really see anything that I'd like to enter just yet. Final coin for the day is going to be Link. Zoom back a little bit and then just talk about what happened, and then talk about what we could potentially see here for Chainlink on the 4-hour chart. So first things first, major double top with a huge breakout point at around $3.50. We saw after it broke out that point, we had an absolute capitulation. I think we're going to see that again. We see this $3.50 zone hold very, very well. We see support hold there, support hold there, support hold there. Many times we've seen the support hold, but more times price tests a zone, higher likely chance that it will inevitably break it. So I'm looking at this zone as a bit of a cliff. If it falls down below this zone, it's going to fall very significantly in my personal view. How far are we going to fall? Well, since last time, we can see that it doesn't have a hard time falling a couple dollars, it seems like, but in terms of major levels of support, $2.50 is a main one. $2 to around $1.70, this support zone is going to be a significant area for the chart for the demand, in my personal belief. But if we're able to get a good entry, potentially maybe sub 350, somewhere around there, and if we're able to potentially close here, that's a huge move that we could potentially capture on Link for the downside. OCO orders, one cancels. Other orders are great if you are trying to capture some profits with wicks, where you see wicks to the downside and you don't want a market order. You don't need to actually be in the market to take profits if the price does hit your order, and you're also able to set some stop losses as well, so you're able to manage risks. So they're great orders if you know how to use them. pretty simple overall, and they're really good for capturing massive wicks to the downside to get that good RR that we are all looking for. So that's going to be the overall outlook for the crypto market update. It was a little bit quicker, but really, Bitcoin is going to move the rest of the market. What Bitcoin does, alts will follow. Yes, we have Bitcoin dominance, we can see right here, and it does look like we could possibly see a pretty significant move higher up for BTC, which would mean that it's weaker for the alts. We see one first major pattern here on the daily, which moved the price up significantly, and we see some continuation patterns here, and then we see an expanding pattern here where volatility is expanding. We do see that it's right at the resistance right now. If we start seeing the price break the 67% mark, which is actually a pretty good fib level as well, 68 around there, and then if we actually see the price continue to fall down, we have the midpoint right here, but it can actually fall further down to almost 58 here, which would be good for the alts, but you know, at the end of, or which would be good for the alts. Sorry, I misspoke before earlier. Basically, when you have decreasing percentage of market cap for BTC, it means that alts are moving to the upside. And if you see Bitcoin dominating and alts receding backwards, it's going to be less bullish for alts, more bullish for Bitcoin. That's usually in more bear market territory because alts are highly speculative, even in the cryptocurrency space compared to Bitcoin. Bitcoin's more like the blue chip, you could call it. Ethereum and BTC are like the blue chip stocks of the cryptocurrency world, and then you have smaller, more speculative alts that are still good quality investments, but are more speculative and don't have as long of a track record in my personal, or in fact, it's not a personal belief, it's a fact, but you know, other alts like Binance Coin, Monero, Dash, look at privacy coins, like utility tokens. There's a lot of USD tokens out there, obviously, but I personally like sticking to the main ones. Even in the alts, I stick to the large, basically almost completely large cap, top 15, 20 coins that I really stick to. I don't really dabble with tiny tokens too much because the crypto market's volatile already for one, and a major part is I like to have liquidity and lots of traded volume when I do trade because of the spread and the bid-ask spread that you have to pay when you are trading higher volatile assets. So that's going to be the video for today. We hope you enjoyed it. Talked quite a bit about Bitcoin, went and dove into some alts there. Got a huge rejection. Some of these alts are looking more bearish than others. Like Link isn't looking too bearish, whereas XRP took a very significant dive, and BNB took a significant dive as well. So we'll see if anything kind of comes up for nice patterns that we could use and have some edge in. But right now, I don't really see anything that would provide me with a significant edge in the market, other than just saying that this is a nice little resistance zone. We could add a little bit here, but I think if we get a little pop in some of these alts and in Bitcoin, we have a great possible price action pattern for BTC with the normal head and shoulders. And we also see some good opportunities here on BNB, Ethereum, XRP, and possibly Link here. Might be a little bit more of a trade that we would have to take basically right when the candle closes below the zone is what we would have to be looking for that price action pattern. So that's going to be the video for today. Hopefully you enjoyed it. If you have any questions, drop them in the comment section below. If you found this educational, informative, entertaining, it'd be great if you'd subscribe to our channel. We do provide updates not just in the cryptocurrency space, but also in the global macro. We go over many charts in the S&P, Dow Jones. We look at different indexes. So we look at Japan, the Nikkei 225. We look at Canada's TSX, Germany's DAX, the FTSE 100, the US S&P, the Russell 2000. You name it, that is going to be in the global macro update. And what you're currently watching is the crypto market update. We do both. We dabble in global macro and cryptocurrencies both. So hopefully you enjoyed this video like always. And until next time, have a good one. This upcoming week I think will be very important. We have in cryptocurrencies, it will be very important. In equities, we don't really have that much coming out in terms of the economic data. There hasn't been really that much impacting the market. Just going to take a quick look at what's happening here. Just changing my filter really quickly. Let's take a quick look at what we're going to see here this upcoming week. We got CPI for the United States. We got interest rates for New Zealand. We got GBP, or GBP. We got a GDP for GBP. The Great Britain pound, or Great Britain UK are coming out with their GDP. Let's just take a look right now. So you got CPI for the United States on Tuesday, nothing on Monday. You got Wednesday, you got the GDP for the UK. You got month-on-month and year-over-year for Q1. You got some manufacturing production. You got monthly GDP. You got PPI numbers. You got employment change for Australia. That would be pretty interesting. Huge potential negative for us. Previous 5.9. Forecast 500,000. That's unbelievable. So that's going to be interesting to see. We got initial job loss claims, which hasn't impacted the market at all. We haven't seen this. Actually, every single time this came out, the market actually probably went up more than it went down. We saw unemployment numbers that are 14.4% negative unemployment in the United States, and the stock market roared that day. So basically, these numbers, these fundamental economic factors that are coming into play, isn't really making the market move at this point. It's just confidence. It's just speculation that the Fed will be able to print their way out of a recession, and when the lockdown does ease and when non-essential services are able to actually reopen, the idea and the hope is going to be that things are going to go back to normal. People are able to go back, spend money, go to bars, restaurants, entertainment, concerts, all that stuff, all the things that everyone used to do. The hope is that it will return back to almost normal, and my speculation is it's going to be a lot worse, not just because of COVID, but in terms of the larger actual economic cycles that are coming into fruition. The fact that we just had the longest bull run in history after we had, previous 2008 crisis, before that 2001, smaller, more kind of common, smaller debt cycles, like Ray Dalio talks about, is every, let's say, 7 to 10 years, around 8 years. And ours lasted from, let's say, 2008 until 2020. So a very long time, longer than average. Looking at the long-term debt cycle, 75 to 100 years. When was the last major economic deflationary period within the United States? If we're looking at the long-term debt cycle, when was it? It was the Great Depression. When was that? 1920s. It's 2020 now. Around 100 years, right? These cycles, these macro cycles occur over and over and over and over and over again. So my belief is that time will basically do what we've been doing. Basically, we will do the same thing that we've been doing for generations, and we will have another recession, a deflationary time. That doesn't mean that I'm going to be deflationary biased forever. I think that there's actually going to be significant inflation after the deflation, but I think there has to be more pain unfortunately, and there has to be more aggressive action taken from the Fed. And now you're thinking, holy shit, how can they take more action? They've already printed plus $6 trillion, but it's happened before. When you have a central bank that thinks that the only way to solve an economic crisis is to print money, they will do whatever it takes to have a forever expanding economy where contractions are terrible, they're feared, they should be swept under the rug for the next guy to take care of, and they should never be handled. How you handle recessions, how you handle economic contraction is printing more money. Just, taking more of the drug instead of going and getting better is what the Keynesian economists are doing right now. If you think that everything is fine and dandy with central banks printing more and more money, look at all the times that fiat currencies haven't worked. There's a lot to choose from. Go take your pick. And for people who are saying that it has worked, look at Japan. Japan's economy is not in a great state because when we look at Japan, Japan's printed a lot of money. Their balance sheet to GDP is higher than any other first world nation in the world. Way higher. They're above 100%. The BOJ, the Bank of Japan's balance sheet, is larger than the GDP of the entire nation. The balance sheet of the BOJ is larger than 25 times the largest equity, the largest company in the entire Japanese stock market, which is Toyota. Unbelievable. And that's where we're heading. And that's why people thinking, okay, we could just continue this for 4 times more the amount of money compared to the GDP we have now. Because Japan can do it, and they've been sustainable, quote, sustainable, so then we can do it. But Japan's been in a deflationary spiral. Their economy is not actually growing. They got massive demographic deflationary pressure that is very difficult within itself. And then you also have the mindset shift where now you have a deflationary mindset of individuals in that population that want to save, that don't want to spend money, that don't want to see prices of goods and services go up, which means that it is very difficult to get inflationary pressure, which is what Keynesian economists are looking for. So that's a little bit of global macro put in there. Will be interesting to see what it comes out to. We got GDP for Germany. They're looking for a contraction of negative 2.1%. We'll see. We got core retail sales in the U.S. negative 8.6% down. We got the last month negative 4.2, so it's basically doubling here. Retail sales negative 11.6. So huge prices that huge moves that we could see, but we haven't seen the real fundamental economics play into the stock market. So we might see the SPX still rally. We don't exactly know. The Dow Jones hasn't really made any moves to the downside either. So overall, the equities market within the United States is not moving down either, but that is for a different subject. Just wanted to touch on that before we have this upcoming week. So hopefully everyone had a good weekend. It'd be interesting to see what we have for this upcoming week in terms of the different equity markets that we're looking at. But at the end of the day, we're going to go to bed and see what we have for tomorrow morning. So hopefully this was somewhat constructive for the people who are watching. And until next time, I hope you have a fantastic day.